Good morning and welcome to the Market Wrap for week ending 3rd of September 2021. Stuart Williamson here, APW at the helm. Okay, this week we're going to do a quick roundup of what's going on in the residential markets, how it's performing in the UK, because it is the first week of September, so we've got all the results out for August and July. Some top tips from different newspapers that I've seen this week revealed the hardest place to buy in Britain, according to the Telegraph, is actually Newmarket in Suffolk, where supply is 45% down. You can't get a house for love nor money, apparently. According to the Times, car parking spaces are being sold for £100,000 a shot in St Ives, which is an indication of how crazy the market is down there. And the Sun weighs in with a 3-bedroom home goes on sale for a whopping £325,000, despite being full of rubbish. But he does say the house boasts plenty of interesting features, including a garden, patio. I didn't realise a garden was an interesting feature. A garden, a patio, and a portrait of Star Wars character Yoda in the living room. So there we go. That's how mad the market is at the moment. That's in West Sussex. The term of the week for me has been reassessment of home. And I'll go into what that means as we go along. But remember that, reassessment of home. Okay. So the overall theme is high demand and falling supply, which supports further price growth. Key takeaways: house prices fell last month for the first time, in July for the first time this year, according to Nationwide. And it says that price growth is at 10.6%, down from the previous month, but it's still the highest figure of 17 years. Savills expect house prices to continue rising as buyer demand is strong and there's shortage of supply. They also expect by the end of 2021, house growth to be at 9%. In addition, stamp duty holiday won't have a big effect. They believe that the sales agreed for this year will be 23% higher than the 2017-2019 average. So it's a very busy market according to Savills. In addition, they're saying that instructions, which is new houses going onto the market, are now down by 9%. And the RICS June survey supports this, saying that the majority of surveyors see a fall in new instructions, but an increasing amount of buyers. Okay, this is the post-pandemic reassessment of home. Okay, people are still doing that. Households are looking at where they want to live and how they want to live, and this is still going on a regular basis. Now that we're starting to get companies confirming that flexible working hours will be allowed, which is excellent. It allows them more leeway to live away from the office. So if you can live in Bristol and do 2 days in the house and 3 days in the office, or vice versa, you might as well have a big house in Bristol rather than a small flat in London. Unfortunately, it's the lack of supply, especially for family houses, means that the market is starting to slow down. So we're not getting enough houses, family houses, onto the market for people to buy. So it is causing a slowdown in sales. As we move into 2022, there will be a strong start to the year, we believe, in line with seasonal trends, but after that, a return to the more usual levels of activity among first-time buyers. The effective end of the stamp duty will be felt a little bit, and some buyers will wait for more stock to come onto the market. So probably going to get back to normal again by Q1 in 2022. That is according to Savills. On a reoccupation of regional cities, Severn Capital report that rental yield in Manchester, Birmingham, Leeds and the like is rising at about 4% per annum as city centres become more attractive again. People are moving back in because that's what I guess people under 35, no kids, want to experience, because it's more vibrant, more exciting. In addition, house prices are rising. According to Zoopla, house prices are rising faster than flat prices. Okay, up to £350,000 is the figure we're talking about. Average house price growth was 7.6% compared to 1.2% for flats. Regionally, the best house price growth we saw was in Neath per Talbot. I don't know if you know Neath per Talbot, but it's a very nice place to live. Average flats were £100,000 and terrace houses were £108,000. But that's 14.6% house growth this year. The only market that was actually down so far this year is Aberdeen, which is 1% down, which is very much tied to the prices of oil. General residential outlook, looking forward, Savills reports expect the UK as a whole to raise by 21.5% by the end of 2025. 21.5% growth for the whole of the UK. The capital would be the poorest performer at 12.5%, with Yorkshire, Humber and the Northwest rising at 28%, and all other locations between 20 and 28%. So it's a great buying opportunity now to make some good capital growth. Markets are moving a lot faster than they were, according to Zoopla. In London, it's taking up to 75 days to sell a house. In Brentwood, it's 49. In Buckinghamshire, it's 41. It's down as low as 25 days in Wales, which shows how busy the market is at the moment. Okay, what about rents? According to the ONS, Office of National Statistics, rents across the UK rose by 1.2% in the year to ending June. However, there's quite a few regional disparities. For example, the East and West Midlands were both up by 2.4%, and that fits in with our discussion before about where are strong post-COVID locations. And the Midlands, as I've said many times, by the fact they are the Midlands and middle of the country, are a great location for e-commerce. And I understand that Amazon, as I said before, I think Amazon has set up a plant near Daventry, and it's getting 60 trucks an hour going in and out. So if e-commerce does go from 12% as it is up to say 30, 40, 50%, these Midlands locations are great places to buy. Not necessarily the sexiest locations in the UK, but a good investment opportunity. The ONS went on to say that London rents were showing a sign of recovery. They're only down by 0.1% over the same period. However, Zoopla, which is a bit more realistic, a bit more up to date, say they're actually seeing 0.6% growth, and that has been supported by RICS documentation. Rents in the city are still 5.9% down, although Hackney apparently is going through a surge where people want to get back into Hackney and start getting to working in the city again. So what are the themes that we've got? Very similar to what we've talked about before. The market is coming off its highs, but it'll be a soft landing. There's going to be no crash. Insufficient supply is keeping prices up, specifically in the housing area, but also coming on now in more of the regional cities and the flats. Rents will continue to rise further, which is excellent news because there's not enough property out there. I mean, there's a story this week about a Scottish couple bought in Suffolk, and they moved down to Suffolk to live in the house. It wasn't ready, been delayed by 6 weeks, so they lived in a campsite. And when the house is finished, the builder said, well, actually, it's going to be an extra £30,000. We've got a better offer for it. And so now they're living in a campsite. So there's a lot of people who are missing out because they're not getting all their ducks in a row before they move. So rents will rise further, and there's going to be a reassessment continuing of home. People moving into the city because they want to get back into the nightlife, having fun. People moving into the country because they've got the ability to work from home more. So reassessment of home. That's the key phrase for this week. Thank you very much for listening. Do take care. Cheerio.
It's time to take your property journey to the next level. APW Property brings you an opportunity to grow your existing knowledge and tap into our network with a research-led approach to UK property. Whether you are a novice or an expert, our team will be here to support your property journey 7 days a week with our new live chat support network. Now making property decisions is even easier with the team at APW, who act as your partner in property, on hand to answer your questions anytime. Ever feel overwhelmed by all the information out there? Now you can cut through it with our weekly research brief and direct access to an APW property professional. An opportunity to be part of a network and community built upon over 30 years in the industry. Here's what you can get as a Property Partner member. Weekly research brief, collating and digesting all the information out there so you don't have to. 24/7 access to an APW property professional and our wider network. Exclusive off-market property opportunities. Bonus podcasts answering your questions and access to exclusive discussion with UK industry professionals. Getting started is as easy as click on the link below, choose your tier on Patreon, set up your account. Once your payment is complete, APW is notified and a welcome pack is delivered to your email address. Subscribe to Property Partners today to join a like-minded community of investors.